What's going on, guys? It's the Bulls and the Bears here, and I wanted to open a vertical credit spread live on the Webull app for you today. What I have here is SPX, the S&P 500 index. Normally I've been doing credit spreads on SPY, but I want to give a shot with SPX here. So this is the 15-minute chart. We're on our second 15-minute candle as it is 9:47. And I'm looking for a opening range break on that first 15-minute candle. Whatever side it breaks to, I'd like to play a credit spread on the opposite side. So it looks like, for now, we're going to be breaking to the upside, which would mean I'm looking to open a put credit spread to call for SPX to stay above a certain level, maybe like 38.20, somewhere down here, somewhere below that 15-minute opening range. But as you can see, we haven't broken out to either side yet. So I'm going to wait a little bit, long enough to where it actually does break, and then we will get into actually opening that spread. We are getting pretty close. I'm going to actually look for the order right now. So right here, actually I want to sell this. So the 38.20 strike is below that opening range because the low of the range is 38.23, so I'll be selling the 38.20. I need SPX to stay above 38.20. And you can see the contracts up top. I'll be selling the 38.20, buying the 38.15. You can see the individual bid-ask spread on the contracts, and you can see the difference between the two is what I'd be collecting in premium in a net credit. So as of right now, the combined net spread looks like 70 by 85. It's changing by the second, obviously. I would like to get at least like 70 to 80. I'm changing my mind. I'm looking at this chart. It's selling off quite a bit. It's actually at pretty strong resistance, and the market as a whole has been pretty weak. I'm actually going to look for a call credit spread right now. Let's see. So the high was 38.48. How about 38.60? Let's check this one. Call credit spread. So I'd be selling the 38.60, buying the 38.65. That looks good to me. Can I get $1 out of it? So I'm trying to get $1. I mean, the ask is 110, 120 by 90. You'd think $1 being a pretty reasonable midpoint would get filled. Gonna modify it. It's running away from me now. SPX is selling off. This is actually pretty annoying. $85, take it or leave it. All right, I'm in there. So information on the bottom. Sold the 38.60, bought the 38.65. Collected 85 cents. So I need SPX to stay below 38.60. I sold calls, and I want those to expire worthless. The only way for calls to expire worthless is if the price closes below the strikes. So 38.60 is that mark I need to stay below. Right now, it is selling off, and if I go to the chart again, you can see the resistance here. Right here, 38.45, 38.50-ish. Like it's been the top of a range for the past few days. And the fact that we pushed up there pretty strongly and now we're getting a candle like this, that's giving me a good reason to believe that we're not going to move much higher today. And I was looking originally for an opening range break, but that kind of move and technical pattern here that I'm seeing, supply zone up top, I think that gave me a pretty good reason to believe that we actually might end up moving lower. So we sold the spread. It's good to go. And I don't even need it to necessarily move lower. I just need it to not move higher. So that's the beauty of spreads. You can kind of do two different things and you'll be fine. So here is the position. I sold it for 85 right now. It's about break even still. So what I'm going to do here is, if I buy to close, let's see what kind of options I have. Yeah, so I can't put in a stop order or anything, but I will put in a exit order at 35. Sold it for 85. I'm going to try to close it for 35, and this will be a $50 profit if it hits. If it does go against me, so I'll put the order out there now. If it does go against me, I'm going to stop out if it at like 1x the premium. So I received $85 for it. I'll take an $85 loss if it goes against me, which would mean the premium would have to be 170. So it would have to go from 85 cents to 170 on the spread, and then I'll stop out, and it'll be an $85 loss. Otherwise, if they decay, if it moves in my favor, I'll take a $50 profit. Risk reward isn't exactly 1-to-1. It's actually unfavorable, a bigger loss to a smaller reward, but you got to factor in the probability of success. I'm already in the money pretty much. I'm in the profit territory. As long as SPX stays where it is, I'm fine. I have a buffer zone. It can move up a little bit and I'm still fine. That's the increased probability of success, which counteracts the unfavorable risk reward. So we'll see what happens. It does look like it's starting to move up a little bit. So you can see the spread is midpoint of like 95, $1. So I'm down like $10 right now. Let's go back to SPX. I can show you the chart here. So this second 15-minute candle, you can see that has a lower wick, so it's popping up a little bit. But we'll see. Again, I need to stay above or below 3860. So let's actually draw that line. Oh, perfect. I can set the coordinates. 3860. That blue line is what I need it to stay below. And as long as it stays below that, I should be okay, premium-wise. Like, I do have a stop set, a mental stop. I'll have to set some price alerts. But I don't expect the premium to really double unless we really push into that line. So I do have some buffer room, some wiggle room there. So that's it. The spread is on. The spread is live. And if it does hit my profit target, then that's great. Successful trade in the books. Well, I'll check on it later and can let you guys know what happens. All right, guys, and that's it. Filled price 35 cents. That was my buy limit order, my profit target order that I set out there. It was a buy order, as you can see. Filled quantity 1. It's all over. I bought back the 360 and I sold the 365. And $50 profit right there because I sold it for 85, bought it back for 35. And we'll just check on the chart quick of SPX. I'll show you. I mean, it hasn't done anything too crazy. We haven't even broken the low of the opening range. We just sold off a little bit towards the lower end of the range, but nothing crazy. But with spreads, I mean, that's all it takes, especially 0 DTE or days to expiration spreads. I mean, these contracts expire today, so they're very volatile when it comes to price action. If it sells off a little bit, those contracts, those call contracts, are going to decay really fast, and all it takes is that little move to hit my profit target. So there's a successful spread trade. Hope you guys enjoyed. If you did, like the video, subscribe for more content, and I'll see you all next time.